please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
It looks like we'll have a flat start, but that's not been a problem for the market. There's been momentum, of course. Let's see if that can continue. Sudarshan Sukhani, Mitesh Thakkar and Rajat Bose now join us. Good morning, gentlemen. Sudarshan, last week of the year has been a phenomenal year, of course. What's the call here for positional traders?
Yeah, good morning again. Sorry, good morning. The last week of the year has been a phenomenal year. But more than that, our statistics tell us, our quant analysis tells us that the last week of the year is almost always fairly bullish. Prior to the new year, the period between Christmas and New Year invariably sees gains. We are already breaking out to lifetime new highs. I think no matter what the markets do today, we are going to cross 10,500 decisively and move towards 10,800. So the trade is, you should be long from last week. In fact, long from the prior to the opinion polls, during the election results, everywhere. The theme is to be long, and today also I think 10,500 is that nervous area. The markets may spend their time around it, 20 points lower, 20 points higher, but eventually they should head towards 10,800. So be long in the Nifty. I don't have a view on the Nifty bank because the Nifty bank is giving me a sense of confusion. But for the Nifty, stay long and be there.
Okay. Good morning, Sudarshan. Actually, I started off with that theme. It is going to be low volume week. And even I have noticed this week after week, the last week of the year, because volumes are thin, it is a little easier for traders to drive markets. And then this is also the week when fund managers would like shares to end higher so that their bonuses are intact. So for a whole host of reasons, this risk on is there everywhere. You can see it even in commodities and globally. So I take your point. This is a pattern that one notices every year. Mitesh, would you concur and therefore go long this week?
Yeah, good morning, Latha. So my sense is very clear. I think, we are close to an important level. Let the level be crossed. That's the best time to go long. So I think I would try and attempt long if the Nifty spot was to get past 10,500, 10,515. Take a 35-40 point kind of a stop and look for rallies to about levels of 10,700 to about 10,750, which logically should be somewhere close to the next target area. If the breakout doesn't happen, then we might spend a couple of more days consolidating between 10,500, 400. But my eventual or the initial feeling is that we will eventually break on the upside, like Sudarshan also mentioned.
Okay, we'll come back to stocks in a bit, but Rajat Bose also joins in. Rajat, a phenomenal year for traders and investors alike. What's the expectation for the last trading week?
First, I want to wish you good morning and Merry Christmas, and to all your viewers as well. It has really been a great year for the market and great year for all of us. Thank you. Now, coming to the index, what I would like to say here is that today I would be crucially watching the level of 10,488. This is a very critical level for me. If the index were to stay above that, then I would definitely go long. Yes, this is not a time to go short. In fact, I'm expecting 10,707. This is another very important level as far as my calculations go. And what I would say is this, that 10,707 would take some time to get decisively taken out, because this is a very important level, a Fibonacci level, and I expect some consolidation, some kind of range-bound activity to happen after the index scales up to those levels. It isn't as if that it cannot go beyond that, but it won't really take out that level and go for higher levels immediately. And on the downside, I would expect that 10,450 would not be breached. So my call would be buy if it were to stay above 10,488, put a stop below 10,445, and target would be 10,591 and 10,707.
Okay, and the Fibonacci level is 10,488.
Two Fibonacci levels are there, 10,488 and 10,707.
Okay, fair point. Let's discuss individual stocks then. Sudarshan, what's on your list?
Well, the list is mainly to buy, and just to add, I'm suggesting that traders should be long with a stop under 10,400. That's just an addition. Asian Paints is finally a buying opportunity. The stock has been in a correction. That correction appears to be coming to an end. So it's a blue chip anyway, that's a buy. Axis Bank is a buying opportunity also. In fact, all private banks are doing rather well, and I expect them to do better in this week and the next week. Even Yes Bank, IndusInd, but today's choice is Axis Bank. The theme is private banks should outperform the market and the public sector banks both. Bajaj Auto has been on a rally. A small consolidation should break on the upside. Our old favorite Reliance should come back to play. It's been in a dull, narrow movement that usually is a precursor to a breakout on the upside. And just to balance it, and also to say that PSU banks are not my favorite, Bank of India is a short sell.
Okay, so PSU banks are not your favorite, but Sudarshan, what about IT stocks? I mean, they've been huge underperformers this year. And now, given that H-1B visa norms are only going to get stricter, the expectation is that we could see more pressure there. You'd stay away?
I would stay away for the time being, but IT has broken out of a range. So eventually, Infosys, TCS, HCL Tech will become buying opportunities, but not necessarily this week.
That is the message, you know. Look at Sudarshan's pick, Asian Paints, on a day when crude is almost at a 1 month high, 65.32. Likewise, rupees at a, near high, 63.90. And Sudarshan says IT stocks are rising. So it's clearly in defiance of our traditional patterns that stocks are rising. Such is the strength of the bull run. Rajat, what are the stocks that you are trading?
I'm trading 4 stocks, and all 4 stocks are a buy. To start with, Bajaj Finance, I would put a stop loss below 1762. And my expectation is that given the kind of momentum it has started displaying on a recovery mode, 1802 and 1819 are the 2 targets that I have. The second stock is Exide Industries, although it posted a small correction on the last trading day of the last week. But I expected to 215.90 is my stop loss, and 225 and 228 are the 2 target levels that I have for Exide Industries. And then Idea Cellular. It's a small move that I am expecting. 102.75 is my target, and my stop loss is below 99.40. The stock closed at 100.65. And finally, a mid-cap story.
Okay, I think we lost Rajat for a bit. Rajat, we'll come back to you for this last pick. But Mitesh, what's on your list?
Yeah. So I have a mix of buy and sell calls, 3 buys to 2 sell. ONGC is something which is now clearly showing signs of an expansion. The breakout happened sometime on Wednesday last week. Now the movement has started. So buy with a stop at 188. Look for a first target of 205. Wipro is something which has been doing a range of 304 to about 285. Now close to the upper end of the range. If it breaks above 304, it's a conditional buy. Buy then with a stop at 298 for targets of 320. And Ramco Cement, after that big breakout, has had 2 days of pullback. So now the risk reward equation is good. Buy with a stop at 750. Look for targets of 830. 2 sell calls. MCX has been negative and underperforming. Remains a short-term sell. Keep a stop at 965. Look for declines to about levels of 910. And I also have an intraday sell on IndusInd Bank. In fact, while I do like Axis Bank and ICICI Bank, IndusInd Bank is something which is not really participating in the rally, underperforming, and it would be intraday sell with a very tight stop at 1666 for targets close to about 1625.
I think you had a sell on IndusInd last week as well, and that call did work out. Has been underperforming the Bank Nifty, IndusInd Bank, that is.
Okay, well,
I think there's one more trading strategy from Rajat. That we couldn't hear you say was that V-Guard. Okay, Rajat, I think we couldn't hear you give us your V-Guard strategy.
Yeah, V-Guard Industries, it is actually breaking out of a range, and that is happening at the all-time high levels, and it has got momentum. I would say that we put a stop loss below 234.50, and 243 and 249 are the 2 targets. V-Guard earlier posted a high around 240, but on the last trading day it touched that level again and closed very close to that high level. So I'm expecting the momentum to continue and the range breakout to be successful. Hence this buy call.
Okay, thank you very much, Rajat. So Rajat is also going with all buys. Okay, with that, let's turn to another very bullish corner, commodities. Manisha Gupta joins in with a roundup of all the action. Manisha, bullish on crude and steel?
Oh, well, yes, and we have started quite well in the Asian markets. For crude oil prices, it's quite different, really, because you have statements coming in from some more oil producers that the rebalancing could happen as soon as the first quarter of 2018, and that has been supportive. In any case, most of the banks and brokerage houses have put a bullish 2018. If not the first half, then definitely the second half. And the strong demand estimates that come in from India and China are just yet another thing that have added to the price rise. So while we are closing this year nearly 15% on the higher side, it's a similar kind of a gain that the markets are anticipating in 2018 as well. There are so many factors to watch, with just one downward risk, and that really comes in from the US shale output, which continues to increase on. But then, yes, metals is something that you have seen good buying in. It is only the Shanghai and the New York session that would be working today. Remember, the LME and the UK markets are shut, so the volumes really would be thin as we proceed further into our day there. But the steel prices are trading at a 2-month highs. The smelters have cut production because of the environment issues. In any case, with the temperatures dropping, you have seen the mining go down as well. This is basically a low demand period, and that really tells you that the production also is going to be on the lower side. So the iron ore prices have gained up by 2%. China's steel is trading on the higher side. The copper prices are trading at a 2-month highs as well in the Asian markets. And not far behind is the gold prices trading at a 2-week highs as well. We did see strong gains in the previous week, and Asia has opened quite positive across for commodities today.
Okay, Manisha, thanks a lot for that. $65 a barrel and trending higher.
Well, we got news from the exchanges that Power Mech has formed a new JV to support its international operations along with Skipper T&D in the Dubai Multi-Commodities Centre. S. Kishore Babu, Chairman Managing Director of Power Mech Projects, joins us now. Mr. Babu, if you can give us a few more details. What is this JV? What is the money you have put in? And what is the project that the two companies or the joint venture will target?
Actually, this company originally formed in Nigeria. We got a job from Dangote Refinery for the $80 million USD. And the same will be operating from Dubai because we have some restrictions for the transfer of funds and all from the Nigeria for the operations purpose. That is why this the JV what we are going to form. This is to facilitate the operations from between the Dubai and Nigeria.
Oh, so it's not a new business you have got. It's only a relocation of an existing office?
Relocation of the existing JV from Nigeria to Dubai.
Oh, okay. And what kind of revenues do you think you can generate from this JV over the next, say, 1 year or so?
Next, I think this project will be started by February 18, and the total tenure of the project is 2 years.
Okay.
And we have to complete this project in 2 years. That 80 million will be covered in this span of 2 years.
Okay. And can you just give us an indication of what this would do to your revenue stream? I mean, in the first half of the year, you've hardly seen about a 7-8% growth on your revenues. What can we expect in the new fiscal?
Yeah, the same thing. The next year we are expecting around the 15% growth from 17 to 18 and 18 to 19. But proportionally, this JV also will give the same proportionally will add into our top line.
Okay, no, what I think my colleague is trying to find out is not just the JV, but what is the situation of revenues for your domestic entity?
Domestic, yeah. Domestic, actually, because right now power is not in it's not good scenario in the power sector. Slowly we are entering into the REC. Already we are doing one or two jobs in the roll application and the transmission distribution. And also we are already working one job in rail. And also we are trying some opportunities in the road sector. And also we are exploring the opportunities in the cross-country pipeline, maybe the oil and gas. Slowly we are transforming from the power to non-power, because earlier we see our revenues 70% is the power, 30% is the non-power.
What's the total order book right now?
Right now the total order book is around 4,500 crores.
Okay.
It will be expected to reach by March 5,000 crores to be executed.
Okay. And what might that yield in terms of margins, these kinds of orders?
Yeah, it is there. The EBITDA levels are 15%. What we are focusing, same thing. We are maintaining it.
Okay. Yeah. All right, Mr. Babu, we'll leave it at that. Thank you very much for joining us with those details. So the announcement to the exchange itself is nothing new. It's only a relocation of an existing.
Yes, the stock's done well. It got listed recently. A lot of private equity investors made a lot of money. And after that it listed, I think last year it listed, and since then it's made some decent money. But we have our next guest joining us now. Okay, before that, Mitesh, I just wanted your thoughts. You said IndusInd is a sell for you, but what about PSU banks, especially the likes of SBI?
See, I think the PSU banks, for me, appears to be mostly range-bound, the larger ones, but I do like Allahabad Bank in the short term. I think there was some kind of breakout which happened on Friday. I'm also watching Canara Bank quite closely. It did move on Friday, but closed weak. So if it starts getting past 378, 380, I would be a buyer there. But for the timing, Allahabad Bank is the top pick for trading. Still be a buy with a stop at 76 for targets of around 83. And coming to State Bank of India, again, a range of about 325 to 305 is developing. If it starts getting past 325, then the recent highs of 340, 345 should be immediately tested.
Okay, Deepan Mehta is also with us now. Deepan, good morning. It's been a great year for portfolio investors, for stock pickers. Your sense of 2018, do you think there are some warning signs, or do you think this bottom-up stock picking will continue to make money?
No, I think there are warning signs for 2018. When the market rallies the way it has in one particular year, and to do another repeat for the next year appears to be extremely difficult. And we are almost 3 years into this bull market, and a lot of the undiscovered gems have been discovered. Usually we have seen during bull markets, analysts, stock pickers go into overdrive. And now even small mid-cap stocks, which were unheard of, have been discovered. Their stories are known. Managements are coming on media and explaining what their performance and progress is likely to be. So I think by and large, it's going to be very difficult for stock pickers in 2018 unless we see a major correction and valuations come to slightly, sensible levels, and there's some amount of margin of safety.
Okay, well, we did get that note of caution even from the mutual fund cafe that we did on Friday with 4 mutual fund managers. Everyone a little wary about the pace at which markets have run up. But Deepan, good morning. If you do still have to look for value, where would they be? Would they be in large caps? And which areas in the Nifty?
See, as an investment process, we are still very focused on secular growth stories. They could be in the banking sector, they could be in the financial services space, consumer-oriented stocks. And although these stocks are expensive, I think incremental capital is going into these companies in the hope that even if there's a correction, eventually, and there's over a period of time, the earnings growth will perhaps justify the valuation that which these stocks are trading at. So I think rather than focusing on the size of the business, it's better to focus on the nature of the business. Like Maruti is a large cap stock, but a secular growth story. Same is the case with HDFC Bank as well as IndusInd Bank. At the same time, we have large cap companies like, say, TCS, Infosys, where stagnation is still there in the performance, and those could be avoided. And the same is the case for pharmaceutical companies. So it's not the size that is important, it's the kind of nature of growth that is important. Consistency, visibility of earnings are of prime importance because of the way the valuations are at this point of time. In order to justify high valuations, we need that visibility, we need good corporate governance, we need the secular growth momentum.
Okay, that's interesting. Deepan, good morning. The 2 large cap stocks that have doubled this year in the NBFC space are Bajaj Finance and Indiabulls Housing Finance. Valuations are stretched here as well, but do you see enough visibility in earnings to support the valuations further?
Yeah, absolutely, I think. And Bajaj Finance disclosure that we and our clients are invested in that stock. And although valuations are on the high side and you may not get the kind of multi-bagger returns which these companies have delivered over the past 3-4 years or so, but I think consistent returns of say 15% or thereabout can still be factored in. And both these companies have a slightly differentiated business model, which is why they're able to do better than the competition. In the case of Bajaj Finance, I think the way they are growing their consumer finance business, at the same time managing their NPAs, is quite admirable, which is why I think it is perhaps the best pick in the NBFC space.
Okay. Deepan, we are entering into the last 14-15 months of this government, the NDA government. There is a budget on the anvil. Would you bet, farmer-oriented stocks since, there is distress as well in the farm?
See, since I've entered this market 20 years ago, I've been hearing about this farmer-oriented stocks and the government trying. I mean, for the last decades or so, the government has been trying to boost the farm sector, and really, if you look back, fertilizer stocks have been big disappointments. Irrigation companies, like Jain Irrigation, have been big disappointment. And from time to time, we have these insecticide, pesticide companies which do well, but then, there's a great deal of volatility in their earnings. So that's not a particular investment theme I'd like to focus on. If you're bullish on the rural sector, then go with the companies which sell over there, like say a Maruti or a Hero MotoCorp, or some of the other companies in the FMCG space, which are trying to grow the rural business. I think that's a better way to play the entire, the rural theme going forward. But even that, I think it's, it's not entirely a rural-centric approach, because these companies operate also in the urban markets where also the variables come into play. So rather than, focusing on specific rural stories, I think overall consumption growth in the country is going to pick up. It's going to, go to elevated levels, and companies benefit from that, especially companies benefit from GST level playing field between organized and unorganized. Could be better picks than a company which is operating purely in the farm sector.
Okay, Deepan, stay on. We have Chandan Taparia also joining us from Motilal Oswal Securities. Chandan, good morning. What stocks are you trading?
Yeah, very good morning. Our market hit the new lifetime high on the last trading session at 10,501, and expecting this positive momentum to continue as we have seen decline in the volatility, and fresh put writing is visible at all the immediate strike. So selected to be in selective heavyweights counter. First trade is buy on TCS. We have seen buying interest in entire CNX IT index, and TCS has recently taken support at its rising support trend line on the weekly chart. We have seen fresh put writing at 2600 strike, and it has surpassed its 50-day exponential moving average. So positive momentum could be seen towards 2735. One can buy with a stop loss of 2600. Second trade is buy on BEL. The stock has seen a strong closing on the week-on-week basis. It has given the highest weekly close ever. It is holding the gains, formed a positive candle. Longs are intact, expecting further short covering towards 199.200. So one can buy with a stop loss of 183 for an upside move of 4 to 5% from current level. Last trade is Shriram Transport Finance. We are positive on the Bajaj Finance and the Shriram Transport Finance. Shriram is the strongest counter in the entire finance companies, making higher top, higher bottom, trading at lifetime high. Longs are intact, expecting positive rollover to happen in the next series as well. So one can buy with a stop loss of 1427, and the stock has potential to head towards 1540, 1545 kind of levels.
Okay, Chandan, thanks a lot for those trading ideas. In fact, Deepan, that actually was going to be my next question. You have been bearish on IT. Do you think this rally that we are seeing, and it's been a decent rally on large cap IT, is a selling opportunity?
Yeah, absolutely. I think, I've been consistently maintaining that IT has the best years of IT are behind them, and, getting the double-digit growth rate will be extremely difficult for most companies. If you still want to invest in IT, I think some of the select mid-cap IT stocks may still do well for brief periods of time when they have a large project, going on stream, or a large customer rolling out services for them. But by and large, I think, the best years of IT are behind them, and, there's disruption which is taking place in the industry, which is not benefiting Indian IT companies. I think the shift towards platforms, towards cloud, towards digital has, kind of changed the entire complexion of the IT industry. So I would still not be positive on IT stocks. No doubt on valuation wise, they appear to be cheap, but I would say that's a value trap. And you could buy into an IT company and, be saddled with low growth, low returns for many, many years. So I would say best to avoid. We have a major bull market in place. It's best to go for growth stocks, where at least we are assured of earnings growth in excess of, say, 15-20% or so.
Okay. Deepan, let me go from IT to the other sector that has had a roaring 2017, steel stocks, and for that matter, metals. Not only Tata Steel and the other metal stocks like Hindalco and Vedanta, even if you looked in the mid-cap space, Prakash Industries, even a JSPL, have all done exceptionally well. Will you keep the faith?
See, I think, steel stocks are very difficult to call, and considering that they've rallied as much as they have, from this point on, it makes a very difficult investment argument, because steel prices can go southwards as well. No doubt, I think, what has happened in China and the synchronous growth which we have seen globally is benefiting all commodity prices. But then these are volatile businesses and volatile commodities. And, from valuation perspective, from their historic growth rates, also in terms of, how much shareholder value they've created in the past several decades or so, one wouldn't want to be in the metal stocks for a long period of time. But there's a nice trading bounce taking place in metals, in the other commodity stocks, and investors who already invested in these stocks, it's an easy decision to remain invested. You could see perhaps 15-20% appreciation from these levels in 2018 as well. But from a fresh investment point of view, I'm not that convinced. Again, as I said, I think margin of safety is not there. And if something were to happen to steel prices, you wouldn't even get an exit opportunity in these companies. So that's the kind of view we have on metals at this point.
Okay, so then, Dipan, I mean, you just told us that you've been in this market for what, over 2 decades now. You've seen, 20 new years. What is your New Year resolution as an investor? What have you learned, the good and the bad lessons from the previous year, and what would you take forth?
I think resisting the temptation is the big lesson that you have to learn. Every day there are new stocks hitting 52 weeks high, new exciting stories which come up, and unknown companies are being discovered, and a lot of the it's very easy to let your guard down and lower the standards that you have in terms of your stock picking, and that could be a huge mistake. I think I've paid that price in the past. So I think the one piece of advice or one piece of learning which I have acquired over the decades or so is to try and keep the quality of the portfolio pristine, which means that no compromising on corporate governance, no compromising on the quality of the balance sheet, no compromising on the kind of growth rates and the type of growth which the companies are able to generate. And I think if you keep those standards, then it will hold you in good stead in good times, or the bullish times as well as bearish times. And when the correction does come, because at some point of time you will have a 10-15% type of a correction, you'll be able to sleep much better and be able to ride that volatility far better if you have a good quality portfolio. So I think that's the most important message which I would like to give investors for the new year.
Okay. Deepan, it's always a pleasure having you with us, and thank you for those words of wisdom. That's an important message. Stick with quality that Deepan is giving us. We looked for more lessons, Anuj and I, when we caught up with some of the top mutual fund managers to chat about the stocks in the mid-cap, pharma and IT space, considering the recent attention to these sectors. Could this trend continue into 2018? Hear out the brightest voices on the street on these sectors. We are back in a jiffy.
We need a catalyst for mid-cap IT and pharma to move. Within that space, domestic pharma company looks quite attractive. They have done well, they have grown, and there is probably reasonable opportunity there in terms of valuation.
Navneet, I'm just looking at some of your funds, and the outperformance stands out for me in a couple of funds where you have a lot of auto exposure, and some of these auto stocks have done well, and in some of your funds you I think have overweight on autos, clearly more than the benchmark. Maruti is trading at 10,000 now, but TVS Motor is at 800, and these stocks are now trading at 35-40 times price to earnings, which we used to give to Hindustan Unilever at one point. So is this the new FMCG? It's accepted now that this growth, so we have to give them 35-40 times?
So I have to see from two perspectives. So within the autos, again, there are stocks that have done very well. I think wherever there has been over the last few years a strong earnings momentum, the price momentum has been very good. So you have peak volumes, peak margins, and then the peak valuation. And that scares you a little bit. And you have to be slightly careful about that, how sustainable that volume growth as well as the margin growth is. Maybe in some cases, some of these positive factors that have run in their favor may run out of steam, and you need to be careful about the valuation. And within that, you need to maybe identify some of the other stocks where valuations are relatively more reasonable. So in the consumption space, we have seen a peculiar feature this year where there are few of those pockets like passenger vehicles or the air traffic or air conditioners have done well, while the overall consumption may not have done that well, and some of those stocks have delivered very well. But next year, if the rural economy does well because of the government spending and everything that has happened in terms of road connectivity, the digital connectivity, financial connectivity, crop insurance, etc., and high government spending, maybe it could be more widespread and some of the other segments within the consumption does well.
Okay, actually let me extend that theme. Naren, the flag bearer of the mid-cap index, not the only, but the flag bearer was the NBFC sector. Will that continue, or will it hand over the relay baton to somebody else? If it is somebody else, who?
Yeah, actually, we believe, with interest rates going up and the cost of wholesale funding on the way up, and the fact that public sector banks have been given capital,
I think the entire situation on the NBFC space is deteriorating for the NBFCs relative to other sectors, and these stocks are now no longer cheap. Their market caps are pretty high. So we believe that, but having said that, you know, there are always poster boys of every boom, and we have to accept that the poster boy of this boom has been the NBFC sector. So while the boom lasts, and this sector still should continue to do well, but I would say the risk return reward is no longer in favor of the sector at this point of time. And the good thing is some of the more defensive areas in financial services like insurance have also got listed. So there would be some amount of move from these kind of sectors to also insurance kind of companies which are not leveraged. So they get the advantage of being an unleveraged entity in financial services.
But you know, what NBFC has done is that it has expanded the category itself. I mean, you alluded to insurance, but now AMCs are also listing. So because of conflict of interest, I'm not asking Manish this question, but Nilesh, do you think NBFC has this extraordinary ability to create, okay, if I'm done with housing finance, there is wealth management, there is AMC. Do you think NBFC can still be the theme, only different kinds of guys?
So one, will all the NBFCs have ability to reinvent itself? I don't think so. Today also we are seeing specialization. There are some guys who are specialized in housing finance. They may reach a saturation point. We have seen downturn in commercial vehicle and automobile NBFCs when the downturn hit them hard. So there will be premium for those NBFCs who are able to disrupt the business model of NBFC sector. For example, Bajaj Finance came with a technology and it disrupted the way consumer durable loans were given. If you can create that kind of niche, if you can create that kind of competitive advantage, there is opportunity. And on the asset management business, we are virtually infinite ROE business. In most AMC business, we have returned the capital invested by our sponsor long back. So obviously this kind of businesses will have its own premium valuation. But at the end of the day, will there be a sector rotation from NBFC to something else? Undoubtedly, yes.